Yeah. What's up, everybody? Happy Friday. Welcome to What the FICC. Spencer is joined as always by Ian Cully, head of FICC at All Star Charts. Ian, today is a very special Friday. Not only is it the last trading day of the first half of the year,
That's
but
right.
we've got ourselves an acreage report coming out in about 13 or so minutes, which is why we're starting late today. We thought, let's start late and end late. So, what we're going to do is for the next 15 or so minutes, we're going to do what we normally do. We're going to rip through charts like gold and silver and copper and bonds and currencies. We'll rip through all that. And then at noon, when the report drops, we'll bring up some live charts and we'll just do some live reaction to this report. So, let's start with it. Gold. We always start with that. How we're looking here, Ian?
Well, gold undercut those big levels we're talking about on Wednesday. The prior commodity super cycle peak for gold back in 2011 on 1923, 1924 level. Undercut those levels on Wednesday. Have been trading below there since. It's hanging close though. It's hanging just below those former highs, but below 1923, and it gets messy for gold futures. And the more I look at this chart, I can move that resistance level up to the former all-time highs around 2089, and I'm starting to see a potential base here. Maybe a head and shoulders. Maybe gold's got some more work to do. Carves out another little short-term base here. Maybe it takes a few weeks, maybe it takes a few months, maybe it takes another year. I don't know, but it still has work to do. That's one thing that's for certain. Moving on to the gold miners, a little bit of positive near-term action. Yesterday, we got a bullish engulfing candle in the gold miners ETF GDX. So a bullish engulfing is where the session opens below the prior day's close and then closes above the prior day's open. Those are the requirements for a bullish engulfing. Also, it has to come at the end of some downside action, right? You can't have a bullish engulfing in the middle of a range. So see, we've been selling off since early May. Now, this could be a reversal candle, or it can only, or it could be simply, letting us know that the downside action in gold miners is due for a pause. So either reversal or a pause here. We'll see what happens today and next week, and we'll get some more information. Moving on to crude oil. As long as it's above 65, Spencer, I think we got to give energy and crude just the benefit of the doubt. Momentum, yes, 14-day RSI is still in a bearish momentum regime, but momentum is improving. And, it just looks like a nice tight consolidation here between 74 and 65. If and when it does get back above 74, that's right around those prior cycle peak for crude oil from 2018 around 76, back above that level. And I think it could really start to rip back towards 83, upper bounds of this range. For USO, 72 on the upper end of the range, 58 on the lower end. Again, above 72, above those recent shelf of highs here. I think USO runs it back to 92. And again, as long as USO is above 58, I think we got to give the energy bulls benefit of the doubt. Moving on to Dr. Copper, that 378, 375 level has been my focus. It's been a polarity zone that I've been watching that's marked by the August pivot high from last year. But now it's turning into a mess. It really is turning into a mess. When I see, all this near-term action flipping on either side, up and over, and back below that level, all while the 14-day RSI has yet to hit an overbought reading. I want to zoom out. I want to zoom out, get some clarity. And, for me, it's more about $4. I really want to see copper futures get back above $4. I think we head back up towards 488. But as long as copper's above 330, I think you gotta give cyclical areas in the market. You got to continue to give commodities the benefit of the doubt for sure.
All right.
What's interesting is that we're getting this some weakness here in copper futures, but if we go to the equity markets, Freeport McMoran, the copper mining bellwether, looks quite different. Near-term divergence between the two, and I really like seeing that strength in the equity space. We've seen very similar situation between energy stocks and energy commodities. So the stocks have remained buoyant, and like we just looked at crude oil, it just won't break down. So I think this is extremely constructive. Yep, notice that 14-day RSI. I've yet to see a bullish print here. I want to see that 14-day RSI get back above 70, indicating that the bulls are taking control of the market.
All right, let's move on to yields quickly, and then 8 minutes until the Acreage report is out.
All right. So yields still chopping sideways, range bound, starting to press towards the upper bounds of these ranges, 5, 10, and 30-year yields. I zoom out. This is what I see. It's a 30-year yield. Middle, further out on the curve. We're still heading higher. Definitely we're heading higher on the lower end of the curve. But yeah, so I see a tight consolidation above a shelf of former highs. I think this trend continues higher, but we'll just have to wait and see. What is interesting though are real yields. The 5-year U.S. real yield broke out to new decade highs yesterday. I think it's extremely significant, especially for gold. So I don't think it's any coincidence that gold has been coming under pressure, undercutting a critical former high from 2011 as real yields start to catch higher. This is, there's a dual pane chart. Upper pane, we have the 10-year real yield inverted. We flip it upside down because it looks just like gold. So definitely something to keep my eyes on in terms of where gold is headed next. For now, I just think it's messy. If real yields continue to rip higher, I think gold is going to come under increased selling pressure. But it also has a lot to do with the dollar, Spencer. And the dollar is just range bound. Still stuck in between that 105, 101 level. Hasn't hit an overbought reading recently. Has never managed to hit an oversold reading in the 14-day RSI. That's a reading below 30. So, it's just stuck in the middle of the range. It's messy. It's ambiguous. Jonathan, if you're out there watching today. And hey,
sick reference.
Yeah, look, 10-year yield, real yield overlay with the US dollar index, DXY. A lot of people, the consensus is that the dollar is due to break down. Everything's going to be hunky-dory. Risk assets are going to rip to the sky. Maybe that's a possibility. I think another clear possibility is that the dollar continues to catch higher. Doesn't necessarily mean risk assets are going to come under increased selling pressure, but it might not be as smooth or as easy as everyone expects.
Okay, we got 5 minutes. Let's just quickly preview the markets, the grain markets as they are right now. So we've got corn, we've got wheat, and we've got soybeans. These are the 3 markets we're going to be looking at here when this report drops. So what are these charts saying to you?
Well, I figure we jump in and look at some daily charts zoomed out and some weekly charts to kind of give the context for these 3 markets before we switch over and we see the live reaction. First up, we have December corn futures. And what you see is a big pop. Like Peter Brandt often calls these moves popcorn trades, because you get this big pop, escalator up, and then we recently got the elevator down, just absolutely coming off, falling below some key retracement levels. So the levels that I'm watching, I really want to see December corn futures reclaim this 38.2% retracement level around 562. So around $5, 60 cents, 62 cents, gets back above there. then I'm eyeing $6. Now zooming out, it's corn's pulling back to a logical level of potential support. This is another retracement level. When we zoom out, looking back at those all-time highs here, down to the 2020 trough, and this is around $5, $5.15. Coincides with the 2014 peak. So I think this is a logical place to see corn dig in and catch higher. Now, whether or not it's going to run back to $6, who knows? But if and when it does take out the $6 level, takes out the shelf of highs here in the December contract, I mean, we could see corn running back up towards $8. If this crop report comes out and really, sends buyers rushing into this market, I mean, as we've seen, these markets can really move and definitely, trend well beyond the mean.
Yeah.
Moving on to wheat. I like wheat a lot. I like wheat because, honestly, Spencer, I like wheat because it hasn't moved nearly as much as corn or soybeans. Much more muted response, to the weather conditions over the past few weeks. But it's at a logical level again to find support around the 674. That coincides with the May pivot highs. If it digs in, reclaims this level, I think we'll be heading back up towards 732, and above 732, and I'm eyeing those shelf of highs from earlier in the year around $8. This is another reason we zoom out. Massive base in Chicago wheat. And that 3.82 retracement level just makes sense to me. Potential failed breakdown here, and it ripped higher. Now it's trying to figure out if we can get back above 737. That's 732 here in the September contract. So let's see. I do like Chicago wheat though. Now finally, soybeans before this report comes out in 1 minute. Back around 1248, pulling back again. Key retracement level. Will it find support? Now, it's a logical level for it to find support, but that doesn't mean it will. However, if it does and start to catch higher, I think above 1311, 1310, we could be ripping back up towards $17, $18 in soybeans. But we'll see. First stop is, of course, going to be this shelf of former highs here in the November contract around $14.
All right. If you have no context for this report, you don't know what we're talking about. If you've ever seen the movie Trading Places, very similar to what's about to happen here in real life. The USDA every single year releases a report on the last workday of June. This is the acreage report. That's what we're talking about here. This is the amount of crop that has actually been planted. There are estimates in March, and now this report is actually the results of the season. How many acres of corn, how many acres of soybeans, how many acres of wheat have actually been planted compared to expectations. So why don't you take your charts off the screen? I will bring up my screen here in a second. Just so we have some numbers here, what to expect. Dow Jones, as they are wont to do, surveyed analysts. They're predicting corn plantings of 91.81 million acres of corn, 87.66 million acres of soybean, and 49.65 million acres of wheat. Remember, if the number comes in below those estimates, that's bullish, right? Lower supply, higher demand. If it comes in above those estimates, that's bearish, higher supply, lower demand, right? Supply, demand, pretty basic stuff. All right, let's bring up my charts. You're going to have to help me out, Ian, with the, oh my God. I was going to say with the symbols here. So I've got the ZS up on the screen. Let's go to the report. I have to refresh my page just to pull it up. But the market's quick, man.
Oh, wow. It's ripping.
So should I pull up a specific month or should I just stick with the
You can
continuous?
stick with the continuation because I can see just on the chart that it's rolled. So here we're looking at November beans. You see
Okay.
that right there, that green line right there, that big gap. That was obviously a contract roll.
Well, yeah, and they, just so everyone knows, the USDA page is like crashing for me right now. I, I can't even get get the report open right now because the page is spazzing out. Holy
Wow.
cow. Anyway, okay, so let's just go market to market here. I'll read you the numbers as I have them. Maybe we'll go to wheat, ZW.
Whoa.
So this is a 5-day 15-minute chart. I didn't want to do a 1 minute because that's a little bit too in the weeds here, pun intended. But 15 minutes is, I think, you know, nice enough. So a happy medium. So anyway, wheat, you just see there. How low did that candle just get? We got down to a
All
666. Oh, that's ominous. Okay.
all the actions in beans
Yeah.
up
ZS.
76 cents right now. What is, wait a second, did they must have changed the what's
Dude,
the limit?
the
What's the
USDA
limit?
website is beyond slow right now. I can't even see anything. I thought I
Wow,
was going to be able to. The page is supposed to refresh as the report came out. Okay, here we go. Soybeans, 796 million bushels, and the estimate, recall for that was wait, what? That's not seven. It's bushels versus acres. I don't care about. All right, fine. 796 million bushels, down from or below the 804 million bushel estimate. So, as I said, right, lower number, bullish, right? Quantity goes down, demand goes up. So that's soybeans. So that's why that's popping right there. What do we have for wheat here? You said all the action. Yeah, clearly all the action is in soybeans. And then what was the corn symbol again?
ZC.
You see, yeah, that makes sense.
Mm-hmm.
Muted reaction there, right? Muted.
It is. I mean, I mean, all the reactions are going to be muted compared to what we're seeing in soybeans right now. Wild moving soybeans. We're getting some a reaction in wheat. Wheat's above that 674 level I just mentioned. You know, it's up almost 10 cents. Talking about the September contract. Trading around 677 right now, 678.
All right. Corn came in below the estimate. 4 point, and I'm going to read you the bushels now instead of the acres, but 4.106 billion bushels versus a 4.255 billion estimate. Soybeans we talked about. Wheat, a little bit. Wheat was a miss as well. 580 million bushels versus 611 estimate. So wheat and soybeans below. Actually, all three of them came in below.
Mm-hmm.
Maybe we go back to that soybean chart. So you don't see moves like this every day. Just for context, and the reason we wanted to stay on here through the report is because last year, this day last year was like the most volatile day of the year for these markets. And actually, every day, every year, this day is the most volatile day for corn, soybeans, and wheat. So on average, here's some stats for you. On average, corn moves 5.5% on this day over the last 4 years. Soybeans have moved an average of 2.9% on this day over the last 4 years. So it's a pretty volatile day for these markets. Wow. Soybeans is still ripping.
Yeah. I generally try to stay out of the market on these days. I mean, that's just
yeah,
that's
I
just
don't
me
blame you.
personally. So I like to just see how the market reacts and then, let it settle and then kind of, and what's nice is we're going to have a couple of days here, a couple of days off with the holiday. And, next week, see how things start to shake out and then step back in.
So yeah,
If
and
the opportunity is there.
I think you mentioned earlier, but that gap on this chart that's not actually a gap. That's just a futures rollover. So
Correct.
yeah, okay.
Yeah.
Well, I feel like I just had my like trading places moment a little bit. Oh, finally my page is loaded for the PDF. Dear Lord, it took like 10 minutes. This is what happens when you're not on a trading floor. Okay, so oh god, no, this is last year's report. What am I doing?
Corn's actually flipping red right now.
Yeah, dude, the website is awful. I can't even get on the website. It was supposed to refresh automatically, and it's not. What a joke. Okay. First time we're doing this. Maybe the last time. I don't know. What we definitely need to get is John Netto, his reaction to how he's trading this.
Yeah.
Maybe he's getting down and dirty. So ZS, ZW, big candle, big wick, right? You can see that, and ZC also. Oh, look at that.
Yeah, corn's flipping negative. Kansas City wheat's also having a good day, or at least a good 15 minutes.
You gotta help me out here.
That way, 15 minutes. It's up 17 cents.
You gotta help me out here on the ticker.
That's KW. Might be KW. Yeah, there you go.
KW what?
There you go. That should. Well,
that's not no.
KW.
Is there a month?
KW. See what comes up.
Nope.
23. KWZ or KWE.
No, I don't know. Kansas City wheat. I have no idea. I'm going back to that corn. I'm going back to that corn chart. Anyway, what else did I have here? So yeah, corn stocks. Again, just to repeat, corn stocks down, wheat stocks down, soybean stocks down.
What's the acreage, the planting? Could they be responding to those figures?
Yeah. Well, hold on. Oh, I didn't even look. Oh, here it is. Oh gosh. Okay. So, it's broken down by state. Oh no, here we go. So, 83. This is for soybeans. Okay. Remember the estimate that I gave for soybean, just to recap here, was 87.66. That was the estimate for soybean acreage. 83.5 was the actual for soybeans. Okay. So lower acreage number on the soybean front. And let's see if this link actually works. Yes, this link worked. Thank you very much. Okay. Fourth time is a charm. Oh, we haven't looked at cotton yet. We should do that. Wheat. The estimate, remember, 49.6, actual 37 million acres of wheat planted. Corn, estimate 94.1. Actual 86.3.
I think the market already had it priced in.
So there you go.
For corn and wheat, Chicago wheat.
Yeah, corn. You would think
reacting.
You would think corn would go up on that because a lower number, again, bullish for prices. You know what we're gonna do next Friday? We're gonna have Angie Setzer on the show. Awesome. If you are into the grains at all, she is on Twitter at Goddess of Grains. She runs a grain marketing firm called Consus, and she'll be on to give us her thoughts on this report. Because obviously, I'm certainly no expert, and Ian's a trader, but he's not getting down and dirty on days like today, right? Yeah. So we'll get Angie's thoughts, like fundamental thoughts on this report next Friday. I thought this was fun though. I had a blast doing this. We need more real time, middle of the day, like market moving events, because all the market moving stuff is usually, with the exception of the Fed, it's all pre-market after hours. We need more real time, middle of the day stuff. I like this. So
that's a good point. That's a good point. We'll have to to hunt down all the different reports coming out and find which ones are the most important.
Yep. All right. I just took off my charts. I think that's a good place for us to wrap up the show. So thanks for watching, everyone. Oh no, we can't wrap it up yet. Ian, can you bring your charts back up? We got a request.
Yes.
We got a request to look at natural gas. Let's do that, and then we'll go. I almost forgot.
Jonathan reached out and wanted to see some natty gas charts. You see my my screen?
Yep, we got you.
Perfect. Okay.
Hold for 1 second. As we readjust our screens.
Yes.
I feel like Eddie Murphy.
Corn finding support right now, guys. Very interesting where corn is finding support right now. As soon as I can I switch charts yet?
Yeah, go for it.
515. It's finding support right now around 515. Interesting how these levels, how price respects and reacts to these levels. Just keep these levels in mind in the coming days. And I'm gonna put out a grain report next week, running through all the grains. I'm gonna cover livestock as well. But let's go ahead and get that chart here. This is natty gas futures. This is a weekly chart zoomed out. And I think, once this base resolves higher, we're heading back up towards $6 for natty gas. Zooming in on the daily chart. Now, this is a continuation chart. Right now, we're in the August contract. That's the most actively front month contract, actually traded contract, excuse me. The level here overhead for natty gas on the continuation charts around 286. I pulled it down below this little oopsie breakout here in early March. I like it right around 286. That's where the sellers are coming in and driving prices lower. I do think it's constructive to see that buyers were able to drive prices higher, to the point that we got an overbought reading on the 14-day RSI, reading above 70 here, highlighted in green. Now, turning our attention to the actual August contract, that's what we're trading right now. You can drop that level down to 280. Let me see these contact points here. Sellers coming in, driving prices lower, little false breakout, oopsie move. And also when I look at the August contract here, it looks like it needs a little bit more time. I like to see these reversal basing formations have some sort of I guess just some sort of balance, right? So it looks like we need a little bit more time over here. Maybe another couple weeks, maybe another couple months. And what's interesting is that we're actually heading into a seasonally favorable period of the year for natty gas at the end of Q3 and into the early months of Q4. And at the same time, commercial positioning is starting to unwind, and I think an unwind could really fuel this next leg higher. I wouldn't even say next leg higher. I mean, we're all the way back down to the 2021 lows. I just think it could fuel a major rally from a potential reversal formation. That's what I see in the natty gas. If you have any questions, Jonathan, please feel free, reach out. Any of you, if anything that you want to see, right, Spencer? Anything they're interested in?
Anything, always.
Let us know, please.
Great question from this person's handle in the YouTube chat is email account. So email accounts asking for is there an ETF for buying corn?
CORN, right? So you can, but I'm not a big fan of ETFs. Just because they tend not to move with some of the grains and ag contracts.
Well, they're moving today.
I prefer to, like we've talked about this before. I prefer, like, if I'm going to trade an ETF instead of the commodity, I tend to lean towards those physical contracts like palladium or PPLT for platinum or GLD, something along those lines. But if you're interested in, I think the DBA.
That's the aggregate, right? That's
the aggregate. I mean, look at this base. It's a good looking base. Potential 40% upside.
Wow.
shoddy math here, but something close to that. Or you can trade ADM. I really like ADM pulling back to, we traded ADM last year, the year before actually too. Just great trade in 2021. It's pulling back to this key extension level here. And I think, as long as ADM's above $70, I mean, I like it long. Initial target up towards 95. And I think if corn's got legs, ADM's got legs. And I think heading back up near 132 eventually.
All right.
All-time highs. I went to heading back.
Yeah. Yeah, there we go. That's our show for the day. Obviously, any questions, you can always email us at the email on the screen, questions@stockmarketmedia.com. We do our very best to respond and address your questions on our shows. Don't forget to sign up for the All-Star Charts Chart of the Day email. Link to sign up for that is also on the screen. You can always call us, 323-421-7910. Learn more about Ian's research. Ian is doing reports every single week. He does a gold report. He does a bond report. He does a currency report. Am I missing any?
Commodities.
Oh, duh. Obviously. Commodity report. He does 4 reports every single week. If you're going to get those reports, call that number. Again, 323-421-7910. Talk to Mary. She'll help you out. They're every single week. And that's a wrap. So everyone, happy Friday. Enjoy the nice long holiday weekend. Happy July 4th to all. We'll be back on Wednesday. Yeah, Wednesday with the morning show. Ian's co-hosting. Ian, you excited?
Oh, yeah. We're going to have a blast. I can't wait.
Oh, yeah. All right. Talk to you guys then. Have a good one. Enjoy the weekend.
Happy 4th, everybody.